In every era of human civilization, how money moves has determined how societies rise, how businesses grow, and how nations define their destiny. Today, we stand at the edge of a new financial architecture. This episode is a journey from traditional settlement systems that built the last legacy to the new one, stablecoin, that will build the next. My name is Olani Ibrahim, and this is the 33 Exchange. Why this conversation matters and why we have to talk about it. Whether you are in the banking sector or you are in the fintech sector, or you are in e-commerce sector, we are entering into a new era of payments. As I mentioned at the beginning of my introduction, in every era, the way we move money is actually determining how economy of a country or of a continent or even the world entirely. Whether you are in the banking sector, you are in the fintech sector, you are in the e-commerce sectors, right? Or even in the policy sector, you are part of the financial ecosystem undergoing its largest shift since 1973. How does traditional settlement work? And when I say traditional, what do we mean by that? Today, if you are in Nigeria or you are in Africa, how do you get to make payments? How do money get to settled? For instance, let's say you have children abroad, schooling abroad, and you want to make payments. You have to pay their school fees. How long does it take for that payment to get to the school or to get to the next country? That's what we're talking about, traditional settlement. The times and the activity it takes to complete a particular transaction. And today, there are key components that make up a single transaction to complete. We have the messaging, we have the clearing, and the final settlement. These are three components that is embedded in the SWIFT traditional settlement. Lagos to probably Dubai or Milan pass through different banks before it gets settled, different compliance check and different stages of clearance before that particular gets settled in a different corridor, in a different jurisdiction. And this, because of this clearing, the messaging and the final settlement, sum up to different days that it takes for that transaction. Average on today, it takes around 3 days for a complete transaction in terms of traditional settlement. The rise of stablecoin settlement versus traditional settlement. I've explained what traditional settlement is all about. Of course, as I mentioned, that it contains or it go through the process of messaging, clearing, and final settlement, go through different banks, different jurisdictions, different compliance check. What stablecoin is doing is that it's taking that different layers of different verification and different checks, different messages into a real-time settlement, right? That collapse the messaging, the value into one atomic moment and finality in minutes. So the process that takes the traditional settlement about 6 to 3 days, to complete a transaction, stablecoins are now taking probably less than a minute to complete such transaction. And that's why you see the rise of stablecoins above the SWIFT that has been in the past century. Next point is global drivers of stablecoin. By the year 2030, it is projected that stablecoin or cross-border flow is going to hit $290 trillion. And average remittance fee as of today, the average traditional fee is around 6.2% of every transaction. Whereas stablecoin, because it was cost efficient, only costs around 1% of that fee. Africa is leading in adoption of stablecoins because of three major points. First, high instability. As you all know, the continent is quite fragmented. Lack of interoperability is causing most of the African transactions, to take too long in terms of the traditional settlement. And this is why the adoption of stablecoin has been a major driver in Africa. One other point that is also giving the adoption of stablecoin in Africa is also the fee. The fee is quite low. As I mentioned earlier, the traditional settlement is probably going to take around 6.2%, while for stablecoin is around 1% thereabout. Then one other major point, which is why the adoption of stablecoin in Africa has been on a very high speed, is the limited access to banks. As we know, most of the banks on the continent do not have capacity and capabilities in terms of foreign reserves. So limited access to bank, high fees, and instability of FX has been the cause of high adoption of stablecoins on the African continent. Big players such as MasterCard, Visa, Ripples, JP Morgan are now inculcating and embedding the stablecoin infrastructure into their ecosystem due to the adoption of the stablecoin and the new legacy of the payment ecosystem. The future is hybrid. Stablecoin, tokenization, blockchain, payment orchestration are going to be used across different legs in the next payment ecosystem. However, no technology is perfect. Now we need to identify the risks and the quantum era. Money is not merely a tool, it is the quiet architecture of human possibility. As the world evolves from old rules into the new ones, we must ensure that efficiency does not totally eradicate wisdom. This is the 33 Exchange. If this video has been helpful to you, come on, drop a comment, like, repost, send it to your friends so that they can also learn as much as you have learned. Also, if you have any question in the global payment trend, fintech, payment orchestration, Web3, tokenization, or anything at all in the advanced technology that you would like for us to share more light, please drop your comments and we'll be happy to discuss about it. Thank you.